Breaking news on Martyn Lucas Investor. Interest rates are coming down this week. We are covering the FOMC meeting live on the channel. Join us live. It is an NVDA day special. A lot of major stocks are going to be moved. It's the first interest rate cut in a very, very long time. Highly anticipated. So join us for that on Wednesday. In this video, I'm going to be covering gold and oil and how the gold is the largest market cap commodity, largest market cap asset in history. So it is a very important mover, and we have predicted it just right. So we're going to be looking at the chart and tell you what that means for the current market situation. We're going to be looking at the technicals. So look at this. This is gold on the monthly time frame. Each candle represents a month. About a year ago, I was very, very bullish on gold. I'm always bullish on gold. I think it's I personally love having the option to invest in gold. It is a hedge against inflation, and it does have growth potential as well. Keeps your buying power very, very secure, in my opinion. Again, nothing I say in this video is financial advice. It's just for educational purposes, and it's my opinions only. Here we identified a cup and handle structure, meaning it's a very large structure. The structure has been forming for over 10 years. So that's how significant the structure was. It was a structure where you have the cup situation here, the handles over here, and your measured move for this technical structure will be from this high point to this low point. You take it to the breakout point, and then you've got your target of $2,800. We then also drew Fibonacci levels from the high to the low. And that also corresponded with the resistance we were at now, which we've just gone through, the 1618. So it does look like we're on our way to $2,845 an ounce. For gold, from the beginning of this year, gold is up 29%. Lots of people say gold is a boring investment. I think it's an amazing investment, and in this year it's up 29%. It's up 20 on the 1 year from last year is up 35%. On the year to date it's up 25%. On the 6 months it's up 20%. On the 3 months it's up 11%. On the month it's up 5%, and on the week it's up 2.5%. So you can see it's continuing to go higher. And where do I think it's going? I think it's going to $2,845. I did bring this to your attention. We had a comprehensive commodity report. I did a whole report on this about a year ago, bringing this to your attention. Why the key dates of what's important for gold, and how it's why I think it's going to continue going up, what each level meant, and how it's going to continue happening. For example, key wars showed bottoms of the gold. Here was the events of 9/11 and the invasion of Iraq 2001 that started the bull market for gold. Here was the COVID-19 pandemic that started the bull market for gold. President Nixon ended the ability to convert dollars to gold. UK lifted all restrictions on gold ownership. That set gold on a bull market, which went up 500% before its first pullback. We were looking at the charts. A graph of an ounce of gold in USD accessed on TradingView. I added notations of key dates and price movements. The graph shows data from January 2021 until April 2023. The yellow line on the chart is the price of DXY, a measure of the value of US gold relative to a basket of foreign currencies. As the dollar loses value, gold seems to go up in value, so that's something to take note of. And then we had future outlook. In 2023, banks such as SVB collapsed, leading to an increase in gold price. So whenever there's instability, whenever there's a banking concern, gold is great. Whenever there's a war concern, gold is great. Whenever there's inflation, gold is great. When interest rate comes down, gold still goes up. So it is a hedge against a lot of things. Over half the gold in the world is used for jewelry today, and 25% in form of coins and bars. So a large amount of gold is used for jewelry. So yes, for example, also in the UK, gold is available in coins and bars without capital gains tax. So another reason people are buying gold. So I had a full report on gold. The risks of gold, in my opinion, were very low. And I brought this to your attention, and now we're finally reaping the rewards. I'm very happy with gold's performance, and I just want to bring it to your attention. I think the world's largest asset is going to continue in price movement to the upside. Silver might be a better trade at the moment. It's not at all-time highs. It has a potential to double in price over the coming years. So that's a trade I'm looking out for. Another big commodity is oil. Lots of people are looking at oil. It looks like oil is at US oil is at a level of support. It needs to hold the $70 level, and then it can continue on its bull run, and then we can see gold go to prices of maybe $95 a barrel. MTDR, one of our members, has a large position in MTDR. If gold goes up in price, so will MTDR. What we're looking at MTDR, there might be a flush out, bringing it down to $42, maybe worst case scenario, and then we can start looking at areas to take profit with MTDR, which could be $52, and hopefully areas of $67. That would be nice for Stephen Lewandowski, who owns a lot of MTDR. So that's a roundup of a few major commodities. I think gold is going to continue rising in price. I think silver will follow suit, and oil might be at a potential pivot zone where it continues higher. Until next time, have a look at these videos over here and over here. Join us on Wednesday where we see what the Fed does. Does it drop its rates by 0.2% off 0.5%? Right now it's a 50-50. So join us on Wednesday. It'll be very volatile. We'll be trading live. Until next time, take care of yourselves and each other.